Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Today, I and my group members will present about the basis of Malaysia income tax system. So, our group members is consist of me, myself, which will present the type of tax and the class of income. Faris Irfan bin Nasri will present the objective of taxation and scope of change. The next person is Nafiz Fahmi bin Neizam. Will present the definition of taxations and the chargeable persons. And last but not least, Haliim bin Ahmad will present the basis period, year and year assessments. Now, let's we go to the first presentation, which will be presented by the Nafiz Fahmi about the definition of the taxation.
Definition of taxation. There are three types of taxation. The first one is Oxford Dictionary, which contribution delivered on persons, property or business of for the support of government. The second one is IRB of that. It's an amount of money which is taken from your earnings to help towards some of the cost of services we receive in this country. And the last one is law cases, which the first one is compulsory exertion of money by a public authority for public purpose enforceable by law. The example is Matthews with the Chicory Marketing Board in 1938. The second one is raising money for the purposes of government by means of the contributions from individual persons. The example of Berger in 1908. So the objective of taxation will be presented by Faris.
So today I will present about the objective of taxation. So the first objective of taxation is as a source of national income, which is a source of tax revenue is used to administer the country and to distribute back to the economy through the development, project or direct assistance. For the second one is as a mean of income and wealth redistribution, is a contribution from people who are able and have the access income to the government for the poor and the needy, channeled through the ministries in the government. And for the last objective is as a promoter of economic growth, which is taxation as a medium and method for promoting economic growth. The tax system is to minimize the restrictions and economic development. So for the scope of charge as stated in the section 3 sets out two circumstances where income tax liability arise, namely for the situation A, the transaction must be income in nature and such income is accrued in or derived from Malaysia. And for the second situation is the transaction must be income in nature and it is received in Malaysia from outside Malaysia, such as foreign source income.
Now we go to the type of tax in Malaysia. So we have two types of taxes in Malaysia, which is the first one is the direct taxes. As you can see, the direct tax is paid directly by those on whom it is levied. Example of direct tax is income tax, RPGT, stamp duty, and petroleum income tax. And for the second type of tax, which is indirect taxes, is the collected via third party. Example of indirect tax is just as the sales tax, service tax, and GST. For the next slide, which is the class of income, as we can see, they have 6 types of class of income, which is the section 4 of ITS 1967. For the section 4A is about of gain or profit from a business. For the section 4B is gain or profit from employment. For the section 4C is about dividends, interest or discounts. For section 4D is about rents, royalties or premium. For the section 4E is about pension, annuities or other periodical payments. And last one for the section 4F is about gain or profits. Now we go to the next slide, which present from Shahruul.
Thank you, Aiman. Basis period, basis year and year assessment. In tax term, using the same example as above, 2017 is the year of assessment. In other words, the year assessment is the year in which your income is assessed to tax. To assess the amount of tax, IRAS looks at income expenses during the financial year. This financial year is known as the basis period. The basis period is generally a 20-month period preceding the year assessment. Financial year end 31 March of each year. Basis period is 1 April 2015 until 31 March 2016, year of assessment 2016. The next, 30 June of each year. 1 July 2015 until 30 June 2016, the year of assessment 2016. And the last one, financial year end 31 December of each year. The basis period is 1 January 2016 until 31 December 2016. The year of assessment is 2016. Let's move to Nafiz Fahmi.
So I present about chargeable person. So under section 989 of the TCA 1997, chargeable person of self-assessment purposes is a person who is chargeable to tax on that person's own account or on another person's account in respect of a chargeable period. And the first one is individual. Individual is under the section 718 of the Act. The individual is in Malaysia for 182 days or more in a basis year. And second one is 71B of the Act. The individual is in Malaysia for less than 182 days in a basis year. The third one is section 71P of the Act. The individual is in Malaysia for 90 days or more in a basis year. The last one is 71D of the Act. The individual is not in Malaysia or in Malaysia for a period of the less than 90 days in the basis year. After that is a company. So companies and bodies of the person must meet certain criteria to be a considered resident in the Malaysia. Section 8(1) of the ITA 1967 provides for the determination of resident status in the respect of companies and bodies of the person, except trust bodies, with subsection 61(3) of the ITA 1967 provide for the determination of resident status of a trust body. So that's the last point. So thank you.